morning, viewers, and welcome to the Market Review, where we discuss developments in the financial and capital market as relates to the economy. Today, Tuesday, 26 January 2021, we'll be taking a critical look at D-Day in the Central Bank of Nigeria, as the Monetary Policy Committee will be finalizing its 277th meeting to take key decisions in the monetary policy space. And this covers the interest rate, or what you call monetary policy rates, covers the cash reserve ratio, liquidity ratio, and the symmetrical corridor. From 2 p.m., the Central Bank Governor, Mr. Godwin Emefiele, will be giving updates on the key decisions taken by the Monetary Policy Committee. But today we'll be looking at monetary policy direction in 2021 and the implications for Nigeria's capital market. And with me to discuss this is Mr. Ebo Ayodeji. He is the head of research and strategy, Greenwich Merchant Bank. Nice to have you and happy New Year.
Yeah, good morning and thanks for having me. Happy New Year.
Yes. Thank you very much. Analysts in their various views and of course outlook for the year, you know that in this period we get outlook reports and people give focus of what to look out for in the year. Most of the analysts we've understudied and looked at say that the Central Bank of Nigeria should continue with its accommodative policy, monetary policy, to support Nigeria's economic recovery. My first question to you is to looking at the accommodative monetary policy since last year when COVID broke out, and of course we had the recession. The Central Bank of Nigeria governor last year, November, at the banker's dinner said that the interventions brought about 3.5% of the GDP, and that they will continue to focus on development finance strategies. From your assessment, how has the CBN fared in this regard in terms of the accommodative foreign monetary policy?
Yes, I think the CBN has provided significant support, but we also, if we look at it in terms of the amount of support relative to the economy, you would agree with me that it's very insignificant, if you want to put it that way, or it's small relative to the economy, to better put it. But you know, the CBN also tried to come up with different support or what to pay forbearance measures for even for the banks, and also intervention loans. Yes. But the CBN on its own part also tried its best to provide that support, but they are also limited. So you can see that even beyond the intervention funds, CBN was like the major provider of support in terms of financing the government deficit in 2020. Yes. About 2.8, about 2.9 trillion, which is very significant. So CBN on its own part is trying to support and it's hoping to see an economy that would grow significantly above the population growth rate, and that's what some of the reasons that have informed some of the measures that have been taken, especially the intervention fund. But I think the complementary effort of fiscal authorities is also very critical before we can see any meaningful results
in the economy and the markets.
Yes.
And those interventions, according to the Central Bank Governor last year, if it didn't come on board as it was rolled out, the economy would have been even a worse shape than what we even have under the recession of minus 3.62%. Do you agree with that?
Yeah, I think the government played a larger role. If we look at how if we dissect the GDP, so we saw increase in government spending, and last year was significant if we compared third quarter to, we are looking at it on a quarter-on-quarter basis. So the intervention from the government really supported the economy. Though with we look at private consumption increased but was marginal. So it's that just buttresses the fact that the intervention funds really helped. But CBN has done its own part. We feel that part of what beyond the level or what helped the economy was the decision of the government to open up the economy for business, despite the rising case of COVID-19. Because when we look at how this, if you look at how this economy is structured, the private consumption continues to play a major role, followed by the followed by investment. So the government still constitutes about less than 10% of total GDP. So you see more effect when people spend, when there are activities within the private space, whether you want to call it the household or the firm, you see more activity within that space. And for the investments, you see more activity when you see investment either from whether it's from private investment from private individuals. That gives higher multiplier effect and higher impact on GDP than government spending. There's a limit to what can take us to. And even for government spending, there are a lot of palliative measures that have been put in place, but we still need to come up with what that platform, that structure. I know the government is trying to build a database so that if they want to distribute or these palliatives, you are able to ascertain who are those that are below the pay level that they should be supported, or who are those that should benefit from this. So I think based on what we can see, CBN did its own bit, but beyond that was the decision of the federal government to open up the economy that really helped the economy.
All right, definitely. So there was some form of alignment in that regard, while CBN was rolling out this intervention and support, and of course pushing the accommodative monetary policy. It was supporting government fiscal interventions in resuscitating or ensuring that the economy is salvaged amidst the COVID-19 pandemic and the current recession. So, but there is a debate amongst analysts. Some feel that it will be sustained, the accommodative monetary policy, while some feel that after second quarter, third quarter, we will see them tightening because of galloping inflation. What do you see likely happening in the year?
Okay, for us, our view is that we may begin to see the CBN tinker with the MPR towards the second half of the year. We believe that the CBN would still watch and see that Nigeria has crossed to a positive growth in the economy and see how that is sustainable. CBN also has other measures, instruments that they can use to increase rates, because we know the clamor is that when you juxtapose the inflation rates with the current yield environment, the negative return is significant. Yes. So if you look at even in the US now, if you look at their long-term bonds, it's almost at zero, and inflation rate is above 1%. So Nigeria is not only the economy where you have that situation where inflation rate is significant. Yes, it has its limit, as is very significant. The spread is wide. And if CBN decides today that they want to increase the rates to support the return the average investor gets on their investment, then they don't have to adjust the NPL. They have, like, the special bills that just been introduced. They can issue it at very attractive rates, and you see that would reflect on the rate at which other instruments would be traded. So we believe that the discussion this afternoon would also they would hold for now at the MPC meeting. They would hold their position to ensure that the last cut from 13.5 to 11.5 at the second to the last meeting of 2020, to see that impact. More of the focus will be on how lending can also still improve. So based on the statistics, there's been an improvement. How can they build on that gain? Also, the FX would also be a major point of discussion at the NPC meeting.
Yeah. And you just brought into context the American situation. So let me just chip this in because the MPC, they always take a look at the global developments also in taking their decision. So we see in the US Fed with Jerome Powell, the interventions, accommodative monetary policy to support the economy. We also see same in the Bank of England with Andrew Bailey, supportive accommodative monetary policy. And the European Central Bank is also doing a lot, mopping up to support the economy, all this to address the shocks of COVID, Christine Lagarde. So are these scenarios going to also influence that decision, at least to hold or just to sustain or be cautious for the Central Bank of Nigeria?
I think you are right that it's the global space is also, that's always the first point of contact to see what's happening abroad. And but you would also agree with me that the impact of the uh, pandemic is more felt abroad than even in Nigeria when we look at it in terms of numbers.
Yes.
Though they have that structure that they can easily bounce back to growth once the pandemic is it's over. But for us, I think CBN would also be what they would do is to see how they can also use a form of persuasion to increase lending, which is critical. Support a lot of businesses uh, during the first wave of COVID-19 was struggled and sought interventions or how to restructure. And now we are not, we're hoping that the government will not shut down the economy, and because that will have more dire consequences on the economy beyond the pandemic. So we believe that the focus would be how 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 much of further support can they provide for businesses to grow. But most times, because we see that the focus is always on the CBN to help solve all the problems, but the fiscal authorities, as they have a lot to do. They need to provide that enabling environment so that most of these businesses can also strive. They can thrive and they can also produce competitively.
Mm, very clear. And just in a minute, my last conversation on the market review, looking at the Biden administration, the analyst that featured said the administration being like pro people, looking at people policies, will definitely position companies abroad to look at other ways of investment, and that Nigeria should position itself with policies to attract those investments. Is that the case? And when you talk about enabling environment, what one or two areas can be addressed quickly to convert or get these investments? Because there's a race for liquidity, and Nigeria is not left behind in this race.
Okay, I think the first point of call would be to review the FX, uh, to rejig the FX policy, to see what CBN would need to look at, to review the process to see how liquidity can improve and provide confidence. Yes, it's really a tough, it's not easy to be the CBN governor at this point in time when oil price, if you recall, oil price dipped significantly as low as $20 per barrel, and they had to improvise and come up with several capital control measures. Yeah. But that has led to significant demand at the unofficial markets because of the reduction in the activity, especially at the importers and exporters window. So for us to be able to enjoy this benefit, we'll need to restore that confidence. For a lot of the investors, they are on the queue trying to see how they can exit because of uh, the challenges what they've gone through in the past month, and they really want to first leave the country first before they decide on what's next to do. If you also look at the capital importation data, you would discover that the rate at which capital inflow has reduced. What we saw that drove the third quarter capital importation is loans, which means it's most of some of the parent companies supporting their subsidiaries, whether in form of loans during the COVID-19 pandemic to stabilize and to sustain their business. So with the actual what we need that can grow our economy, which is foreign direct investment, it's really very obvious that government is constrained in terms of revenue. It's very obvious that we need the support of the foreign investors. Even the portfolio investors is also required because they provide that liquidity so that the CBN will not depend solely on oil proceeds to grow the external reserves, which may create pressure on the CBN and may lead to further adjustment.
Yes. And coming to the foreign exchange policy, because you just mentioned that, I mean, there's been this debate over time. But before that debate, the central bank governor and the 2020 bankers dinner said that yes, he's heard the poll and that they're looking at the gradual liberalization of the FX market. Is that a good pointer, at least to look at for 2021?
Yeah, I think for us, we would always go for the managed fixed exchange rates regime.
Okay, so you're in the team. You're in the team of the managed fixed that's managed floating, not the allow the market determine the rates.
Not allow market, because there also needs to be some form of certainty. Okay. It's only in very efficient markets that you can easily have that floating. Okay. So when I talk about manage, so when CBN says that there is a need to make an adjustment, they make those adjustments, whether upwards or downwards, you make that adjustment. But leaving it to market forces may also cause some form of I don't think our market is that efficient to have that floating, to use the floating exchange rate management or structure. So I feel that the managed fixed exchange rate would still be better for now, and the adjustment should be made as when due. What has always happened in the past, the more we delay in those adjustments, the more adjustments that we eventually make because of the trust that has been dampened, and that would have dried up some of the FX inflows that should have provided support for the naira.
Okay, so definitely, the debate again is that what will make people invest, like you rightly said, we jig the FX policy so that we can attract investment, attract foreign portfolio investment, attract foreign direct investments, and a lot of analysis experts on one hand say, allow market forces to determine it, adopt it, while like you and some other analysts and economists say, let's just continue to manage this floating of the exchange because, like you rightly said, the market forces, Nigeria's market is not efficient yet to do that. So how do we address this major concern which you all have about attracting investments if you continue with the managed floating?
No, I think what I've said earlier is that when we see that there's a need to adjust, we adjust early enough. So that will provide some confidence. So people will already see that signal. Okay, there's a bit of shortage in inflow. Then you have that adjustment. It may be a 2% adjustment, maybe 3%. And when things are also, when the inflows are also significant, you can also make some positive adjustments, which will lead to appreciation. So once you begin to see that, you can see that you are managing, you are looking at the variables, looking at the situation before you make those adjustments. Currently, significant reduction in the liquidity of the FX at the investors and exporters window, you can still, we still have significant spread. The high and in window is around 394 naira to a dollar, and you have the you have the parallel market, which is the cash dollars at almost 375 naira, 475 naira to a dollar, and you have transfer dollars, which is the inflow dollars, at almost 490 naira to a dollar. So once you have those variances, there would always be an incentive for people to see how they can access dollars at one market and try to come and sell at the other market. And for those
that's the arbitrage.
Exporters, they will not also be comfortable to exchange their dollars at the official market when they can see a market. Because if you put it into perspective, you are bringing in $1 million. Why will I want to change that $1 million and get 394 million naira when I can get 490 million naira? That is very significant. So
a difference of 100 million.
Nigerians would try every means to see what they can do to go to the other market that gave us there. So we need to, and this has been done. If you look at 2 years ago, we would even discover that the black market was cheaper than even the investors and exporters window. So there was stability, and there was confidence. So you will get all those inflows would come. I think we will need to quickly also revisit this so that we can benefit from flows that will be coming to frontier and emerging markets in 2021.
Definitely, we have to revisit this FX approach policy, and also the clamor of IMF, International Monetary Fund, and World Bank, where they said we need to also address this disparity between the official and parallel markets that need to use this pluralism, having a unified market. Is that happening very quickly?
I won't. I think we may. We'll just be hoping that something is done quickly, because we want the economy to also benefit from the inflows. Also the that's African Continental Free Trade Zone.
Free trade agreement.
Has also kicked off. How are we also positioned to benefit from this? How are going to be? So there's a lot that we need to do for us to benefit as a nation from these policies.
And the question of a productive economy, because that's what monetary policy is also looking at, productivity, and even some areas that the central bank looks at, advising the financial institutions to look at areas like the ICT, Information and Communication Technology, structural financing, areas that can unlock our productivity as an economy. And you know that the challenge of allocating forex to sectors, productivity, and also taking decisions on withholding forex allocation to some sectors receives several views and perspectives. But again, the question of productivity is very critical as monetary policy continues to navigate.
Yes, productivity it's critical, and for you to produce, there are a lot of other factors that you require that we call inputs. So those variables are critical. You need labor, you need capital. Those are the first two major variables that are required for productivity. But if you look at labor, we need to work on the quality of the labor, the capacity. It's because of the brain drain. It's also impacting on the country that you have a lot of the good hands that would have contributed positively leaving, and a lot of companies with interesting ideas really don't have people that can help drive those initiatives. And when you talk about the capital, which has to do with finance, the bank still not comfortable, which is really very obvious when they look at other bottlenecks for businesses. They have to provide their power, they have to provide their water, they tap multiple taxes, then also distributing those goods and services. Also, by the time you look at those costs, at the end of the day, there's really, by the time you now have the finance cost, those businesses cannot survive. So for the banks to also lend to those spaces, those areas, it will also take time to improve productivity. But I think as a nation, we need to come up with a long-term development plan for the manufacturing sector. Let there be a roadmap. How do we want to? If we see that if the roadmap is clear, I believe that even for the banks, they would also change. They would make a shift to increase lending to the manufacturing space. We need to come up with a plan that shows how we want to be adding value to our raw materials. It is not just exporting those raw materials. You get more money if you're able to add more value to them. And as we add more value to them, we're also able to create jobs. So it's important that we come up with an holistic plan that would help us to uh, grow that manufacturing sector that has a major impact on the overall economy.
Yeah, definitely. And this definitely will be what the Ministry of Industry, Trade and Investment will need to work out with the Nigeria Export Promotion Council. Remember the Nigerian Industrial Revolution Plan. I think that's something that we still need to look at how it keys in for manufacturing. And like you rightly said, I would like to see the financial institutions involved more. The central bank had pushed the LDR, loan to deposit ratio, to 65%, but beyond that, like you said, the moral suasion becomes important when there's a clarity in plan. So let's look at today. What are your key expectations in terms of decision? And what is the implication of this to the capital market from the equities to fixed income?
Okay, I think for us, we're expecting that the MPR would be held constant. We don't expect any major shift in the key variables. And what that also does is that, especially for the fixed income market, it also provides further clarity because we've not been seeing significant transactions within that space. A lot of traders are trying to get clarity on the direction of rates. And that's what's responsible for when you look at the bid offer spread, very significant, over 200 basis points. So after the MPC meeting, we believe that trades will pick up tomorrow, and based on the clarity that they will get from today, and we may begin to see rates moderate slightly because of that uncertainty, we've seen rates gone up, and despite significant liquidity in the system. So we feel that there will be a reversal in rates will moderate further once activity picks up in the fixed income market. And for the equities market, we all know with the current structure that we have more domestic participation in that market. We also believe that what will be driving interest will be more dividend yield. So we're expecting that most of the traders would be looking at stocks that will give a dividend yield of above 5 to 6% in the coming 2 to 3 months.
Above 5 or 6%. So interesting. Like you said, trade picking up in the fixed income, because last year it was really, really, really down at low rate regime. People didn't really see traction there. So you say the MPR will be held at 11.5% and other parameters will remain. That's what you're saying, clearly.
Yes, clearly.
Okay. And lastly, when you look at addressing this gap between the financial sector and the real sector, what are your final words in how we can have that middle ground and really achieve impact in the economy? Because it's all about driving an economy, recovering from a recession, and sustaining households and businesses.
Yes, I think this topic is not anytime soon. The banks currently, you also have with this new policy that dormant funds or 6 years and above, the dormant balances will be moved to the federal government. These are these are funds that have been used for long-term funding. So now, if they now have to use the active balances, which mostly are always short-term, then they will have to think twice of funding long-term assets. So we believe that, yes, it's critical that funding needs to go to the real sector, especially employment generation sector. What we see, or what we're expecting, is that some of the banks would also try to begin to carve a niche for themselves to see how they want to increase their expertise in some of these critical sectors, even within the risk sector, such that they understand the cash flow, they understand the risk. They would even help to see how can they mitigate this risk, and as a result, grow that particular sector significantly. So those are our perspective, and we feel that before we can see significant support from the financial sector, we will need to, even for government, there need to be policies that will provide confidence for them to also be able to lend to that space.
Thank you very much, Mr. Ebo Ayodeji. Very clear that Central Bank of Nigeria's first Monetary Policy Committee meeting for year 2021 will hold rates. You also call for a foreign exchange policy that restores confidence and highlight the fact that our market cannot, at this period, in terms of, it's not efficient enough to have that free-floating system. You also call for an industrial policy that gives a clear roadmap for the manufacturing sector to really drive its activity and support the economy. And you also call for that coordination in policy that encourages the financial institutions to do more in supporting the real sector to drive growth. And hopefully, this will be the direction that deepens activities even in the capital and financial markets. And of course, economy should recover from the recession and things return to normal. All things being equal with the vaccines and, of course, us keeping safe during this period of the COVID pandemic. Thank you once again, Mr. Ebo Ayodeji, the head of research and strategy, Greenwich Merchant Bank, for the time. And, of course, we'll be monitoring the Central Bank of Nigeria when they announce the Monetary Policy Committee decisions for today from 2 p.m. Thank you once again.
You're welcome. Thanks for having me.
Yes. And that'll be all for the market review for today. You can join our website, www.proshareng.com, to read our news stories, articles, and reports, particularly around developments in the market. You can also follow us at Echo Politics NG, at The Analyst NG, and at WebTV NG for further updates. And if you have any question, comments, observations you'd like to make concerning the monetary policy direction for 2021 and how it affects the Nigerian capital market, send your views and comments to news@proshareng.com. We'll be glad to receive it and respond to you appropriately. To come your way again, let's make market conversations real, looking at how it impacts the economy. Thank you for watching. Have a nice day and stay safe.